In diesem Video gibt es das dritte Interview von der Baltikum-Reise 2019, dieses Mal mit Robert Lasowskis von der P2P-Platform Twino. Viel Spaß dabei! Hallo und herzlich willkommen zu einem neuen Video hier auf dem Kanal von Rethink Peer-to-Peer-Kredite. Mein Name ist Danny Neithardt und auf diesem Kanal geht es um authentische Erfahrungsberichte und tiefgründiges Hintergrundwissen zu Peer-to-Peer-Krediten. Ich möchte das Intro wirklich sehr kurz halten, denn das Interview mit Robert, ich glaube, es geht circa 1 Stunde und 10 Minuten lang, aber einfach nur mal kurz 2-3 Kommentare im Vorfeld von meiner Seite. Twino ist auf jeden Fall die Plattform gewesen, zu der ich im Vorfeld der Baltikum-Reise die meisten Fragen, die meisten Kommentare bekommen habe. Viele Anleger haben sich gesorgt, primär aufgrund der Tatsache, dass der Geschäftsbericht für 2017 eine extrem negative Tendenz hatte. Negatives Eigenkapital wurde ausgewiesen, einzelne Zweigstellen des Unternehmens mussten geschlossen werden. Und hinzu kommt natürlich die Problematik der Kreditverfügbarkeit, die jetzt schon seit mehreren Monaten irgendwie wie ein Damoklesschwert über Twino schwebt. Und insofern war die Liste an Herausforderungen und an offensichtlichen Problemen, die ja auch zu besprechen waren, sehr, sehr lang. Und ich möchte im Vorfeld mal dazu sagen, ich glaube, dass hier sehr, sehr schön deutlich wird am Beispiel von Twino, wie wichtig es eigentlich ist, eine ausgeglichene Balance zu haben zwischen Investoren auf der einen Seite und Krediten und einer Kreditverfügbarkeit auf der anderen Seite. Häufig ist es ja so, die meisten Peer-to-Peer-Plattformen haben effektiv mehr Darlehen, als sie wirklich finanzieren können durch die Investoren. Und Twino, das muss man sich einfach mal so ein bisschen ins Verhältnis setzen, Twino ist eine der Top 3, würde ich sagen, größten Peer-to-Peer-Anbieter in Kontinentaleuropa. Wenn man sich jetzt mal die Anzahl der Investoren und auch das monatliche Kreditvolumen ansieht, was über die Plattform vermittelt wird. Und dennoch ist Twino meines Wissens nach einer der wenigen Plattformen, die effektiv mehr Darlehen benötigen, als sie aktuell Investoren haben. Und das ist schon eine sehr einzigartige Situation, wie ich finde, im Kreditmarkt. Und es zeigt aus meiner Sicht auch schön dieses Spannungsfeld, in dem Twino sich gerade bewegt. Auf der einen Seite merkt man hat sich so ein bisschen die Finger in Märkten wie Mexiko oder auch in Spanien verbrannt, muss aber gleichzeitig natürlich eine höhere Kreditverfügbarkeit für seine Investoren zur Verfügung stellen, damit es da einfach jetzt nicht noch weiter von der Unzufriedenheit wächst. Also das sind sehr interessante Herausforderungen, die Twino hier gerade begegnet. Und deswegen kurz vorweg, ungefähr ab dem 2. Drittel des Interviews gehen wir deswegen auch sehr, sehr gezielt nicht nur auf den Jahresbericht, sondern auch auf die Situation in den momentan einzelnen Kreditnehmerländern ein, in denen Twino aktiv ist und auch Darlehen vermittelt. Und hier gibt Roberts, wie ich finde, sehr, sehr schön und auch sehr transparent Einblicke, wie man momentan die Situation in den einzelnen Ländern bewertet, zum Beispiel aus regulatorischer Hinsicht, weil man ja sehr viele kurzfristige Konsumentenkredite verteilt, aber aus anderer Sicht eben auch, welche speziellen Kreditarten, welche speziellen Kreditformen möchte man in den einzelnen Ländern ausprobieren, welche hat man bereits eingesetzt. Und ich glaube, dass hier sehr, sehr gut deutlich wird, ja, dass Twino so ein bisschen auf der Suche ist momentan nach diesem Erfolgsrezept, um wieder richtig in die Spur zu kommen. Ich bin gespannt, wie ihr das Interview wahrnehmt. Schreibt mir euer Feedback dazu auf jeden Fall gerne in die Kommentare. Lasst uns dazu austauschen. Und weil das Interview so lang ist, habe ich unten auch noch ein paar Timestamps in die Videobeschreibung gepackt, wenn ihr zu bestimmten Stellen des Interviews gleich skippen wollt. Ja, ein sehr, sehr spannendes Unternehmen. Ich hatte eine sehr gute Zeit mit Roberts in Riga. Schauen wir mal, wie ihr das Interview wahrnehmt. Ich bin sehr gespannt auf eure Meinung. Los geht's.
Hello and welcome to interview number 3 for my Baltics trip 2019. Today I'm joined by Robert.
Hi.
From Twino. Thanks for having me and inviting me and answering some questions. Very much appreciate that. And thanks for having me.
Yeah, thank you for coming and visiting Twino as well. It's a pleasure. So I guess we can start with the interview, and maybe I can introduce myself at the very beginning, right?
It was my first questions. Please go ahead.
My name is Robert Lasowskis. I'm leading the Twino Investment-Plattform. I have been leading it for roughly 1.5 years. Previously, I was also in the company, but my role was a bit different. I was working with a couple of investors, so a couple of investors might know me, also with business development on our platform side, so a couple of different sections, but I wasn't leading the platform, and then I started to do that, and as I said, some roughly 1.5 years ago. Other than that, my personal background, generally speaking, I'm from finance industry. I've been working in insurance and also in an online bank previously. So that's pretty much about me. I can also, I guess, talk a bit about Twino, because you'll probably ask that as well.
If you want, I can just go and you can talk a bit in the meantime. I think you know what people want to know.
Yeah, so about Twino, I mean, generally speaking, I think the easiest way to understand our business is to separate that in two parts. So we have the lending operations that are active in 5 countries right now. So we are in Latvia, and that's where we sit right now. It's our headquarters. Then we are also in Russia, Poland, Georgia, and Kazakhstan. And those are our core markets, with the biggest ones being Russia and Poland. In all of those countries, we also have offices. In Russia, we have 2, but generally speaking, the offices are primarily for customer support, debt collection, and procedures like that. But we also have small teams there that are responsible for the business operations. We also have country lead that is generally responsible for the business in specific country. And the investment platform side is the second side, so that's what we are mostly speaking about, and that's where I come in and work on a daily basis. So investment platform has been around since 2015. So this year in May we will have 4 years. We have investors from all over the Europe, with the biggest investor base coming from Germany. I guess it's around 30-something% of German investors on our platform. And then we have, investors from multiple countries across Europe. So Germany, Netherlands, Italy is also pretty big. Then the Baltic states, because we are here in Latvia, so we obviously have quite many investors from Estonia. That's, I guess, generally speaking, about the platform and Twino.
Okay. Then maybe to go into that questions, I obviously prepared a few questions surrounding those kind of topics. Maybe having a step back. So you mentioned you're with Twino now for almost 3 years, I think in total, covering different positions, as you mentioned. Now you're the P2P-Platform Lead at Twino. Mm-hmm. What does what does that exactly mean? What kind of tasks, beside doing like the publicity part for the investors? What does this job include for you in total?
I think it's pretty cool environment for the platforms team, because generally speaking, it's very interesting. To be honest, we have quite small team for especially the platform. So platform specific employees are, I think, currently 6. So the team of 6, those are people that are working only on the platform. But then we also have other departments that are helping us. We have marketing department, risk department, finance department, and so on. But generally speaking, we have
What is the platform part doing?
Generally, the main task that we do, we are solely with the platform. So new product development, we have 3 developers that are working only on the platform. So they are working on some new features. They are fixing some old ones, some problems. So if investors write to us that something isn't working, then they try to fix that. And some of them at the same time work on some product development. Features as currency exposure that we introduced last year, or things like that. But me, I'm doing basically all of the things combined. Only thing that I'm not doing is developing, so I'm not programming really. But apart from that, yes, I'm communicating with all the departments. If we need to do something in marketing, I'm trying to figure out what's the best way together with the marketing department. If it's something from finance, then it's finance department. So it's really different. Sometimes I'm communicating with investors. As I said previously, I have communicated with some of the bigger investors that we have on the platform. So nowadays I also tend to type some messages from time to them to understand if there are any problems. Maybe they expect some new features, and just to get the feedback. So that's, I think, quite important.
What's maybe what you can you share maybe if there's one single part that investors seem to? My personal feeling is many investors seem to like a mobile app for the individual platforms. What is like the biggest demand currently from investors looking at Twino?
We have also organized a couple of surveys. I think the last one was already 6 months ago or something like that. So generally speaking, they really love buyback guarantee. That's the core feature that's popular across all of the platforms, and that's something that the investors really like. As you mentioned also...
It won't be a new feature.
It's not a new feature, but I guess it's the basic feature that everybody really likes. It's the buyback, and everybody's fine with that. Mobile apps, that's something that we already have. But now we are working, you asked about the new projects.
Yes.
Okay. Now we are working on sort of a redesign for a couple of pages for our website. For example, if you log in your profile, we want to improve a bit the auto invest tool and what comes with that. So we have sort of even three parts. So it's auto invest that just works regularly based on your criteria. Then we have portfolio builder, which is a bulk invest function. You just set up your criteria and then it invests in multiple loans. And the third one is just manual investing. So we're trying to sort of maybe compile them, maybe make it simpler. For example, if you look in the manual invest, there might be multiple loans and you might want to invest on all of them in the same page. So that's something that we are doing. And then we are working also on currency exposures, some things, some new tweaks, some new features there. So multiple tasks on the features that we have and improving the user interface mostly right now.
So we can probably tell that within your platform lead position, there's a few things to do.
Definitely.
One question that I always find interesting, obviously, talking to people from within the industry, do you invest into P2P lending yourself?
Not that much. I would say not that much. What I do is I think that I have accounts in most of the peer-to-peer platforms. Well, at least
observation
just to check it out, how everything works, and see how it differs from what we have, and maybe there's some cool things that we are missing out on. But yeah, generally speaking, not that much. But yeah, I've tried with some smaller amounts, I guess.
Okay, and Twino itself on the platform, do you have like your account?
Yeah, I have my account, but it's a really small one. It's just €30, I guess, or something like that, just to test out. Well, sometimes I want to test some loans. We're launching some bug fixes or things like that. But yeah, generally speaking, if you're working on new features, we have test environments, so you can test everything out and not the real life, but then you just check whether everything works, and then you put it in production environment where also the investors can work, invest, and do everything.
Is there probably other areas where you prefer to invest? Like, do you go in stocks, estate, or?
Well, to be honest, I'm currently looking at the markets globally. If you take a look on stocks, they seem a bit overpriced currently. If you look at real estate, it seems quite overpriced right now. So I'm trying to figure out.
But you're observing the market, I can tell.
Yeah, I'm observing the market because if you're looking at stocks, they're quite expensive. The same in real estate, as we spoke before. You said also the same in Germany, that real estate prices are really high. It's the same in the Baltics. Yeah. So.
Okay, holding the cash account and then waiting for good opportunities. You already mentioned, let's say, the separation, because to me it's always very important investors understand also the differences between Twino as a group and the platform, the P2P lending platform on the other side. Now, you pointed out already the differences, I think, quite well in the beginning. Maybe you can outline a bit better some numbers, some statistics about the group itself. So maybe from employees, from loan volume to product portfolio, just to get a probably better understanding about the structure of the group of TWINO.
Maybe I'll start with platform. So about platform, the key numbers that we're looking on is investor count. So currently we have around 16 to 17,000 active investors. We also have some 10,000 of additional investors that haven't invested, but we are counting the ones that have invested, so those are 16,000 or something like that. Then we are in those five markets that I mentioned. Overall volumes that we have funded through the platform are already, I guess, more than 450 million, which puts us probably in top 3 in continental Europe. On a monthly basis, it's roughly 15 to 20 million of loans funded, which again is among top 5 platforms in continental Europe, definitely. And that's what we have succeeded. That's what we have achieved in this period where we have been in the market. Talking about the lending operations, however, we are in 5 countries. The biggest ones are Poland and Russia, and then we are also in Georgia and Kazakhstan and Latvia. But those are smaller parts of the business for us. In Russia, for example, we are one of the 2 biggest non-bank lending businesses in the country, and the country is pretty big, so that's a good business there. Poland the same, it's quite big market. There are multiple also platforms, but multiple loan originators from Latvia also there. And then we as well, talking about the numbers for the loan originators, I mean, Russia and Poland are the biggest ones. I can talk about the employee count. So we have around, I guess, 400 or something like that employees across the group. Most of them are customer support. As I said, in Russia, we are really big loan originators, so we also have a quite big team for customer support and debt collection in the country. Also, Poland's team is quite big. I think we have 60 or 70 people in Poland and more than 100 in Russia. In Latvia, here in headquarters, we have 60 to 70 people, and they are in multiple departments, so we are trying to cover most of the departments in headquarters, and then they are helping also the loan originators that we have in each country. So here we have finance, marketing, customer support for Latvian business, platform, people and culture team, and all the teams that we have, and also management team is here.
Okay, well, that's quite. I think people can understand from the emphasis you put. Is like it's a big dimension. It's not a small startup. That's really like a big corporate here.
Yeah, but sometimes we are still in. There are some competitions. For example, in Latvia, there's a competition for startups. It's like startup brand competition or things like that. Yeah. So we are still there, but at the same time, it feels a bit weird because we're like a team of 400 people. Yeah. It's like, how can you be a startup? Yeah. But yeah.
Also being like in the market for more than 10 years now.
Yeah. I probably didn't mention that, but we started, all the TWINO group started in 2009 with the lending operations, and then in 2015 we sort of converted our business to peer-to-peer lending.
And as you said before before we started recording the video, you were called like Finabay, or?
Yeah, that's our previous company name. So but then we changed that to TWINO in 2016, or maybe at the end of 2015.
With the launch of TWINO then?
Yeah, more or less.
Okay, like the P2P lending platform then. Okay, I think because one of the questions most investors have raised prior to my journey here, when I was asking within the community, is there any questions for the individual companies? There was a very big feedback in regards to TWINO, and many have been very concerned about the annual report that has been published. I don't know if I said it correctly, the BDO, which is basically like the regulator that kind of looked at audited basically the performance of the economic year. They pointed out, okay, there might be some ongoing or serious certain concern about the performance. The liabilities exceeded by roughly 3.5 million the assets that can be provided. So there was a very, let's say, negative buzz, and also like you saw it in the online communities, a few articles that covered this topic as well. Maybe in general, also with decrease of employees and all those kind of elements. What is it like that you could address to the investors in regards to that report? Is that something like you feel like that's really as the BDO said, a solid concern that you're facing right now, or in which kind of status? What was the reason maybe for it, that loan volume, the funded loan volume goes down, the overall situation? What is it? Maybe I can't get the question out. What can you answer around that? This kind of topic. What can you tell?
Sure. I guess we released financial results of 2017, and we also added 2018, 9 months. But there's a bit difference that the concern was for the SIA Twino, so which is the mother company of all of our entities, and at that point we had negative equity for 2017. But that's just one company of Twino Group. So on the group level, we still had positive equity, which is fine. And then 2017, as you said, it wasn't the best year for Twino. Also, of course, investors have seen that and felt that, I guess, at some point. But what we did in 2017, and probably it goes back to 2016. We tried to expand our business really rapidly. We launched operations in multiple countries at the same time. We started new types of loan origination. For example, at the very beginning for Twino, we tried short-term loans, and then we went to installment loans. So just to put it.
Can you explain the difference?
The short-term loan is pretty easy. So you give out the loan for 1 or 2 months, so short period of time, and after that you get the money back. And so it's easy to understand how the borrowers do their repayments, what are the default rates and things like that. But if you are going into installment loans, those are longer term loans. For example, if you give 5,000 euros to a person in Latvia for 5 years, you don't know what will happen in 5 years. So you have given the money out, but then maybe after 2 years the person defaults, and it's really hard to manage those risks at the early beginnings of the company, and especially in multiple markets. At the beginning 2017 we understood that pretty much at this point we understand that's too big risk for the company, so there were layoffs. We restructured our products that we had. We decided not to continue business, for example, in Spain. We sold those operations. Mexico, those were the markets that we couldn't make money, and we understood that most likely in 1 year won't change anything. The market is still really, really difficult to work in. As I gave the example with Mexico, really difficult market. It's high costs in marketing. At the same time, default rates are high and the fraud rates are high, and all that together, it just was pretty bad. So we invested money there. We gave some loans out, but it's just lost because it's really difficult there. And then 2017 we sort of stopped these experiments in those markets, and then started to restructure the business, and that's what we have been doing for now almost 2 years, and it has been really successful. I mean, in 2018 we already have seen profit for the as I said, we published that 9-month report, but it was only SIA Twino, so it's part of operations. If we will look on the group's level, the results should be better, because there will be all of the countries that we are operating in, and at that point all of the loan originators that we had in those 5 countries were profitable on EBT level, which is a great success after the 2017 when we had losses in pretty much most of the markets.
I think it was 9 of 11 or something.
It might be like that. So but in the end of the day, I guess it was perfect learning lesson to have in a business. So for Twino we had 7 years that were really good, growth, expansion, and everything's fine. And then there was the problem situation that was handled, and now we have clear picture of all of the markets that we have, and we know how to make money there. And I guess that's probably the most important thing for the investors as well.
So probably also to take this away, like appetite seemed to be very big at one point, but now you kind of try to saturate more through existing markets and strengthen your market share in those countries.
Yeah, but that's what we have been doing in those markets that we are in, and what we are also looking into those markets. All of the loans that we have are consumer loans, so we are trying to look on different loan types in those markets. So currently in Latvia, we are looking on small to medium enterprise financing, which seems as something interesting, and we might be doing something like that. And that's what we are doing. We're looking in multiple markets on what we can do inside of that market, because in the end of the day, we already know the market. What we have to understand is only the product. But when you go to a completely new market, then it's a bit different, and there's new regulation, new consumers, and everything's fresh, so it's more difficult then.
But what is, maybe just to cover off this topic now in the end, what is, because you entered probably into those markets for a reason. And just because something is not profitable in the first place, because obviously you need to gather experience, in order to maintain, okay, is it really working in the long run? And I'm sure you also put, I assume, thoughtful consideration into, okay, we go to Mexico, we go to Denmark, we go to Spain, and what, at which do you feel like it seemed to me like an impulse saying, okay, we make that move, probably in 1 year. And when the results obviously show, there's no need to maintain or keep going with that. So it's okay, I think, to close the operations. At the same time, was it an initial fault maybe to go to the wrong loan types, the wrong markets? So has there been some due diligence difficulties or problems up front, or?
Yeah. I mean, it really differs from the market to market. Of course, when we go to new market, we do due diligence of the market. We understand what is happening there. But the reality in lending business is that if you don't start, you don't understand. You don't know. That's how it is. You can ask competitors. You can ask. You can get some consultants that help with the market, but none of them have real experience, so you just have some facts about the country. For example, salary level is like that, liabilities level is like that for the regular consumer there, or some other metrics, but that's just metrics. And then when you start in the market, you get the first data from your experience, from your company, and then you start to adjust the the credit scoring modules to understand to whom do you give the loan, and it usually takes quite a lot of time. Even if it's a short-term loan, well, in most of the cases, it will take at least one year that then you understand the consumers, whom do you give the loan. Because initially, you can buy some databases of clients, of course, that's possible. You can buy some metrics, but you still have to figure it out. Because the markets usually are quite competitive. For example, if we take Spain as an example, we went there because it seemed like a really great market. It's huge economy. The banking industry doesn't give loans to people, so there's obviously space for non-banking industry, and we knew that some of our competitors are in the market and doing pretty well. But at that point when we went to the country, it was really competitive there among the loan originators. Then we found out that the fraud rates, so the people that are trying to get the loans, are a lot of fraudsters, and the default rates are really high. You start to understand that this seems tricky. And I think we went to Spain. We were there, I guess, for 2 years or something like that. And during this period, everything changes. And there are a lot of changes. Then we try to adjust the scoring modules, but still, it seemed like impossible thing to make anything valuable from that. And in our case, if you're selling and offering that to investors, it seemed a bit weird to try to invest the money where it just goes nowhere.
Doesn't work, Okay. To me, what I would like to do now is so at the moment there's 5 existing borrower markets for you. It's Latvia, Poland, Russia, Georgia, and Kazakhstan. You mentioned already a few details. What I would like to do is just maybe you can provide some information on each borrower market, because what I really like is how you see, just as you explained with Spain, it seemed to be like a non-banking lending market is possible there. There's attractive yields. Banks are not really funding loans. Maybe you can just give some insights to the ones that are more interested in particular borrower markets. what the current status is for Twino and why you think also it's so appealing for your business model, like focus more on short-term loans. Starting probably with Latvia, which is the oldest one since 2009.
Yeah, we
very
have
established, I guess.
Yeah, we started in Latvia and we obviously started to lend the money in Latvia. At that point, we lended the money from our balance sheet, so there were no platform to get the funding. We did offer some bonds, so we attracted some money through bond offerings, but that's what we did early. And Latvia has been quite interesting market ever since then. I mean, it's 10 years now, so there has been a lot of changes in regulation, and it's still happening all the time, also for non-banking lenders. But we have been in the market. I guess our market share is not that big. It's probably 5 or even less % of all non-bank lending market in Latvia. But what we are doing here, we are trying to fund or give the money to people that we feel like it's safe to give the money to, because in Latvia we have installment loan products, so longer term, so 5 years. And at that point, it's really important to understand that this person seems fine, no huge liabilities and things like that. And I guess that's why Latvian market is fine for us. What is else happening in Latvia? We are assuming to most likely we will go in small to medium enterprise financing, so we'll offer financing also to small to medium enterprise businesses. That seems something interesting in the market that is happening currently. I mean, I think that's pretty much sums up in Latvia.
I heard that also Latvia also talking to Via Invest, and in general I feel like Latvia or Latvians have a very good paying back moral, so they tend to take it, I don't know, more serious, or at least they pay back their loans more frequently. Does it have something to do also maybe because you're obviously located in Latvia, that you have additional data, additional information, let's say beyond the credit bureau, that allows you to evaluate also the situation better? Or
I mean, sometimes it's just that people are a bit different in each of the market. For example, in Latvia, as I said, we have seen good repayment culture for the clients. So I guess they have this feeling that if they take the money, they give the money back. So in some of the markets, we saw that that's not something given, and you have to really watch out. For example, in Spain and Mexico was the ultimate level that we saw. Just crazy amounts of fraud. I mean, every second, or like everybody's trying to take the money and not paying it back, and the default rate is really high. And at that point, it's quite difficult to assess what to do. You can decide to give smaller portion to borrowers, so less volume, but at the same time you can't get that much data out of that, so it doesn't help with the scoring. So it's really difficult if the market is really challenging at the early beginning. So you have to invest millions of monies to make it work, and you never know if it will. So
if it pays out, pays off. How about Poland?
Poland, also one of our earliest markets. It's the second market, I think, that we launched in 2011. Could be like that, yeah. So good experience in the market. Have lots of data, so understand the market very well. We know the scoring modules there very well, so it has been a good market for us, and we are trying also the installment loan product there. I think we launched it also a couple of years ago, but we are still trying to better that and make it work even better for us, so that the default rates would be as low as possible. And we also have short-term product in Poland. Currently, I think that we are not planning to launch any additional lines of credit there or type of loans. So sticking to these two.
Never change a winning team.
No.
Russia, you mentioned, you're one of two of the biggest non-banking lenders. So
yeah, we are one of the biggest lenders there in the non-banking space. So online lending. We have two brands there, so we have two teams basically that works in Russia, and we also have 2 offices there. We have one in Voronezh, which is a smaller city in Russia, but they're mostly for customer service and debt collection, and then we have one in Moscow where is also the management team of the country, and the team there is quite big. I think it's more than 100 people, so they have most of the departments covered. They also have their IT team that is working purely on their lending products. And we haven't launched installment loan there. We tried for a bit with one of the brands that we had, but it didn't seem to be very successful there. So I guess in Russia, short-term loans work better, and we have stick to that basically. We are also trying to look on different loan types there, but we haven't yet decided to launch any new types. But it looks like a good market.
How about do I say it like in the US, Georgia or
Georgia? Yeah.
Georgia,
yeah, like gorgeous.
Just like the state, yeah.
Yeah, Georgia. It has been historically one of our biggest markets. So 2016, it might be one of our biggest market at that point. But there was continuous regulatory changes that basically has eliminated big part of non-bank lenders in the country. So I guess the bank lobby or something, but the interest rate caps have been changing from time to time. And if you offer short-term loan, it's not profitable at one point. So currently it's still fine, but it doesn't seem to be very big potential market. We'll see how it goes in Georgia. But it has been a good market. Now it's getting smaller and smaller. So yeah, it's not among the biggest ones for us anymore.
And the last one is Kazakhstan, also like one of the latest that was added 2016.
Yeah.
Was your experience there?
Yeah, it was at the very early beginnings. It seemed like a very good market, and it still is good. But we haven't seen so rapid growth as in Georgia, for example, because when we started in Georgia, the growth was exponential from month to month, which was really good. In Kazakhstan, we see that there's demand for consumer loans that are non-banking, but we haven't seen that big demand. I guess we are issuing around 1 million euros there. Well, there we are issuing Kazakhstan tenge, but to make it simpler, it's around 1 million euros, so not that big part of our total business.
Okay. Can you explain, I don't know if you have any numbers here, the repeating rates of borrowers? Maybe in general, they don't need to be really broken down to the one that you offer on the platform, but maybe in general, the loans that you issue. Do you have any numbers for the repeating rates for individual countries or as a whole?
Like repeated customers that come back?
That take basically a loan also second, third time with Twino?
I think, on top of my head, the latest number that I have heard somewhere, most of the customers that get one loan, they will come again in some point of time. So I think it was 50 to 70% or something like that, depending on the product and market. But it's pretty high. I think most of the customers are fine with the loan, and if they need some financing again at some point, they come back to a company that they already know. So in most of the cases, they are repeated customers, and for us the repeated customers are the best customers because we already know that specific person. We know the payment culture for this person, whether there's huge liabilities where maybe he's hiding or she's hiding something, but at one point you already pretty much know the customer.
Well, I think that's a good number. I mean, like, it's more than every second loan. I actually did a research on my loan portfolio with Bondora, which assembled in the last 18 months a bit more than 5,000 different loans. And because they provide all the data to analyze the loans, so I had a split depending on the market, but the overall split was also 50-50 between new borrowers and repeated customers. It's a good number, I think.
And sometimes in a couple of markets, to attract more customers, you give the first loan for free. So essentially, you don't make the money from the first one. So you make money from the repeat customers.
So that's also one approach of yours to say, okay, in order to gain trust, getting new borrowers, you even say it's for free, like just pay back what we gave you, or
and it's not that expensive because it's short-term loan, so you give the money out for a month, and then at the same time you test the user whether would you like to give the repeated loan to the person.
Oh, interesting. One of the elements that you just touched base on is the regulation is constantly changing in the markets that you operate in, cropped yields, interest rates, all the different, conditions that you need to apply in order to run your business successfully in those countries. Now, Twino is obviously very big. How big is your legal team, and how do you look at, in general legislation changes? How do you prepare for those?
Yeah. I think now in all of the markets that we are in, we are regulated. So also in Kazakhstan, I think at the beginning of this year, they got the consumer loan market regulated. And what we do usually in all of the markets, we are part of some kind of association in the market that operates for non-bank lenders. And that's in most of the cases is the best way of understanding the market, talking with the competitors or your business partners at some point, and also talk with the association that is most of the cases communicating also with regulators and some government officials that are working on some regulation. And in most of the cases we also try to communicate with the regulators through these associations. If something changes in the regulation in some specific country, usually in most of the cases we know that months before the changes, so we can adjust our product and also all of the agreements and all of the things that are there. In most of the cases we also have to adjust the platform because there might be some changes in the product. But yeah, that's fine with us because we know that ahead of a time. And legal team, it's not that big, I would say. In all the countries we have at least one lawyer. In Latvia, here in our headquarters, we have two lawyers. But if we need some more extensive job done, then we use some outsource consultants or just legal persons. Yeah.
Okay. Well, thank you very much for the insights here on the different borrower markets. I personally find it very interesting to also get some, insights beyond what is publicly available.
Yeah.
Well, thank you very much. Next up is a quote from your CEO, Armand Brooks, that I want to confront you with. That was in October 2018. I read an article, and he said, right now we have more investors than loans we can sell. They are lining up, and that's all without advertising.
Yeah.
So my first question is, loan availability has always been a big topic also, I think, among investors in the previous months and maybe also years. How do you find borrowers in general?
For the borrowers, we usually use advertising or some publishers on online media, so ads there, and maybe their contacts. Advertising.
So everything online.
Everything online,
depending on the market here in Latvia that you have.
Yeah, in some of the cases we also have offline advertising, but in most of the cases the biggest effect is from the online advertising. And that's what we do basically in all of the countries, because otherwise you just can't get to the customers, because in most of the markets, I would say in all of the markets that we are in, there's solid competition going on, so you have to advertise, otherwise you don't get the borrowers.
And how do you plan now to increase the supply of loans and loan requests in general maybe?
It's a difficult question, because at one point you understand that you don't want to give the loan out for specific part of people in one or another market.
Or the cost per lead becomes too high, or
sometimes it's marketing things like cost per lead. Sometimes it's just the default rates for some specific segment is too high, so it doesn't make sense. You can't make money from there, so you just
the mathematics don't work out.
And in the markets that we are in, we know the market's really good. So we understand at what point it just doesn't make sense to have these type of clients. Those acceptance rates are pretty low in all of the markets. I would say in Latvia, I think it's below 20%. So if you apply for a loan in Latvia for our brand, it's 1 to 1 1/5 chance that you will get the loan. We look at the liabilities, the salaries, and those are the basics. And then there's loads of other metrics, like even social media presence, what you're doing there. Maybe you have some weird posts, but all of that is automatic. So or from which
that's
device?
That's all an algorithm then.
Yeah, from which device, for example, you apply for the loan. So we have a list of specific mobile phones and the price ranges defined, which will most likely not pay back on, and it all is based on 10 years of data. So lots of customers.
I find this very interesting because, like, here's I think where artificial intelligence then kind of comes into place. And I think a good example, and it's if you can talk about that, would be very insightful, because I also asked other companies that I don't want to name, they couldn't provide or didn't want to provide any more detailed answers. Let's just assume a borrower is on a landing page applying for a loan.
Yeah.
And let's say you probably have, I don't know if that's the case with Twino, where you have, let's say, a button where you can see, okay, how much money do you want from that loan, the calculator, exactly, which time period. And now one that takes more time into considering, do I need more money, less money? Do I want to pay it back in the longer or in the shorter run? Okay, obviously here's a short-term loan.
Yeah.
But how would an algorithm calculate if that's good or bad? Maybe someone that takes longer, on one side you can say he's probably just unsure about the real amount that he needs. On the other side you could argue it's very careful thinking about it. So how is that judgment in those algorithms?
Yeah, and that's why it's really hard to launch operations in a new country, because to be honest, all of the countries, so nationalities are important in those roles. If you have huge amount of data, it's pretty hard to understand what is happening. And then you deep dive in some sections, for example, I don't know, person with salary X to Y, what they are doing. And things like that. So it's really important to be in the market for some period of time to understand the market, because you can't get just lucky in one specific market. Not nowadays, when companies really are looking in some really specifics. I mean, there's like thousands of data points what the people are doing. As you said, if person uses the calculator like 10 times, maybe we shouldn't give him a loan. That might happen. I mean, it's just an assumption, but we check all of the data that we have, and we try to build really solid credit risk and just credit modules, because for us, in the end of the day, it's the most important thing that we do, decide to whom we give the money. And that's basically it.
Because you cover obviously also for the risk, for the default that comes along with it through your buyback guarantee, which we will discuss in a second. Just quickly, because it was like, do you have specific ways to look at how you want to increase now the supply for loans? Is there something in place where you say, okay, because my gut feeling says like many investors have been not really happy about the situation, say my money hasn't been invested, I look for alternatives. So do you have like really specific actions that you plan, or is that just the state right now, or before you go into new markets, but you said you want to go more deeper? So how do you balance the supply and demand from borrowers on one side and investors on the other?
As you said, currently the demand from investors is bigger than our supply, but the one thing I think is the most important is to understand that also for investors, it's not that welcome to increase your origination volumes just to have investors somewhere to invest. So that's not what we are going to do. But the thing that we want to do, we want to explore the markets that we are in, as I mentioned previously, different type of loans. And also we are looking in a couple of markets in different geographies. So we have been looking to Asia, and a couple of different other countries there, so we see some potential there. But nowadays we won't go in 5 or 3 different markets at once. It's not gonna happen. It just doesn't make sense. It's like extremely risky. So we'll try maybe one country at a time and add to that. And I mean, different type of products, that might be the case as well.
Okay. Next topic is the Alternative Lending Index. It's called ALI. It's something that you can download on the Twino website. It's a report that has been created in conjunction with KPMG Baltics. And basically the report compares lending environments across Europe, and that was over the 6-year period from 2010 to 2016. Maybe can you just share the main results that you found in that report?
Yeah, I mean, the goal was generally to take a look and give some information also out there to, even to competitors if they want to, but just to share some information that we have found out together with KPMG. And what we did, we broadly looked on the bigger markets, well, basically I think all of the markets in Europe, more or less, if there was some information, to understand where is the key markets for non-bank lending industry. Because previously, there haven't been reports like that. You can look from case to case, case by case in all of the markets, but the data is not that easily to be found. Sometimes you can Google all of the things up or just go to some association, but still you won't get that much data in one place. The idea was just to take it all together, summarize what's happening in Europe, what we understood, that there are some certain markets that would be extremely challenging for non-bank lenders to go to. For example, Germany, France, or some of those markets that are pretty developed markets in Central Europe. The biggest challenge for non-bank lender, as for example TWINO, would be, as you know, you are investors that gives the capital to our business. So if we are paying 10 to 12% to investors, we can't give out the loans for 5%. Doesn't make sense. So those markets are no-go, definitely. And then there are some markets that are working well for us and for others. Latvia and Poland are among those. We have been here, so we know that. And then there are some markets that might be good, but we haven't explored them due to a couple of reasons. I mean, sometimes it's regulation, sometimes it's huge market with a lot of competition, and then things like that. So I mean, generally speaking, it's just a useful summary, I guess, for investors and also for loan originators if they're exploring some new markets.
Yeah, because what I figured was really interesting, one of the conclusion was, Hungary and Slovenia, for instance, seem to be very appealing markets for alternative finance and for non-bank lenders. But at the same time, although that showed the result, TWINO is not actually operating there or having, let's say, any further plans there. So I figured that was funny. So maybe can you say why?
It's regulation. I don't know. I don't know those cases specifically, but that might be regulation, because sometimes there's no non-bank lenders because it's not possible. So that might be the case there.
Okay. Let's talk about risk for a moment. We kind of, covered it already in our conversation a bit to some extent. On the company's website, I read the reason for the success of TWINO is a combination of strong management team, local presence, and proprietary scoring models. And the last part figured or caught my interest. So proprietary scoring models, that to me sounds a bit, a bit secret, a bit mystique. What can you share about the scoring, the underwriting process that TWINO is following up? You covered already on a few spots what you look at, but maybe just again, what is the criteria you look at, and how does your evaluation process for the borrower look like?
So in the most of the markets that we are in, there's pretty solid credit bureaus in all of those markets. So there's some general information available for the clients, about the clients, borrowers. And the registration process for a loan is usually that you have some quick questionnaire, with the basic information, contact information, name, surname, things like that. So you get the main things from there. Then you can make the credit check with the credit bureaus. So you get the main idea, maybe the person has huge liabilities, so it's a no-go already on the first step. So you just say to the client, sorry, we can't give a loan to you. And then there are some more propriety, so I don't even know how to spell it. Some scoring modules.
You wrote it.
Yeah, some scoring modules that we use. So that might be basically anything, starting from device, starting from the time when you apply for a loan, and all sort of information that we can gather from, Google search, social networks, and things like that, if we have access to that. Sometimes, of course, we don't have, because all of that is happening automatically. On average, I think the person starting from applying for the loan, if he or she gets the loan, can get it in 15 minutes or something like that.
Yeah.
So it's really quick and mostly automated. In some of the cases, there are some manual checks. For example, if you have to make the some final decision at one point, just to double check some data, maybe there's some error in some connections or things like that, but mostly it's automatic, and we're just trying to check all that we have. So time, of course the basic things, income, liabilities, but all kind of data points. We are using also some third-party services that have experience, especially credit scoring, and as I said, that's the most important thing. So that's what we are doing, not me personally, but the credit risk data science department on a daily basis. So all day, every day, they check some things that are happening and have to improve the loan quality, the loan portfolio quality. So
Okay, can you talk about the overall percentage of loan requests that are rejected as a total and for each origination?
Yeah, I don't know those numbers on top of my head, but I know that, for example, in Latvia, we accept around 20% of the people that apply for the loan. Yeah, in some countries that might be a bit higher or a bit lower, but I think generally it's 20 to 30%. And sometimes you just decline at the early stage. Maybe it's a fraud, maybe it's just some person with huge liabilities, so no. Or maybe he has 5 loans already, so again, no. So yeah, depends on the case, but yeah, it's usually pretty solid chance that you might not get the loan.
Okay. One crucial aspect discussing risk is obviously buyback guarantee. It's one of the tools that is very welcomed and cherished by, definitely for German investors. You see it on most of the platforms that offer a buyback guarantee. How does the buyback guarantee work at Twino?
Our buyback guarantee is, the main idea is what we are trying to do is make it as short as possible. So we are buying the loans back from the investors after 30 days of the loan being delinquent, so in delayed status. That's what we are doing. And if you're an investor and then the loan goes in delayed, you know that in 31st day of being delayed, we will buy it back. And that's basically it. So we're trying to make it as simple as possible, not anything complicated, but we have also a different type of guarantee that's called payment guarantee, and that is something that we apply to longer term loans because it, generally speaking, just makes sense. But because we had also this problem in 2017, we had longer period loans, installment loans. For example, if a loan is, it has term of 2 years, for example, then if you invest in that loan, you will receive interest and also your principal back for those 2 years. But what might happen is that the loan is bought back by us, in this case, for example, in 5th month. But what it really means is we are buying the loan back, but the borrower is not paying the money. So it's pretty strange way of giving a buyback to a person. So that's why we decided to introduce payment guarantee, which sort of it really took away the cash flow risk that we faced with the buyback guarantee for installment loans. And what we did, we sort of promised to investors that with the payment guarantee, you will get all of the principal back, all of the interest back, but it will just be paid according to the payment schedule that was initially there. So if it's a 2-year loan and the person defaults in the 5th month, then we are not paying all of the principal back, all of the interest back, but we are still continuing to pay it according to the payment schedule that was set up initially. So in our case, it just lowers the cash flow risk fundamentally. We don't have give the money back right away, even though the borrower is not paying the money back. For investor, it's fine again because he or she still receives the principal and also the interest, but just in longer period of time.
Okay. The buyback guarantee, to me, obviously, I personally am not as comfortable in general, probably not platform specific towards the buyback guarantee, because to me it's just a shifting risk that transfers either to the originator or then basically the platform itself, like it would be in your case. Most investors probably are not that concerned. They'll see like, okay, I get my returns, it's fine. But at the same time, you need to, deal, and you will deal probably with the risk also beyond when the loan defaults. So can you tell a bit about how the recovery and collection process for Twino works in the back end, and how you operate there?
It really differs from the country to country, but generally the process is pretty straightforward. So if the loan goes in delayed status, we are buying it back in the 31st of day from investors. And then what we are starting to do, we are starting to whole debt collection process. It initially starts with our operators, so they are calling to these persons, writing emails, just trying to understand what is happening, why the person isn't paying the money back. But sometimes the person isn't answering anything and has somehow suddenly disappeared somewhere, and at some period of time we are selling those loans to specialized debt collection companies. In some markets it's 90 day, sometimes it's 120 day, sometimes it's 60 day. It really depends what is the situation in the market. Sometimes those companies offer really solid deals, so we might sell the loans in 60 days being late, so days past due. Sometimes it's 90 days past due, but we have specific debt collection teams in all of the markets that we're in, and they're trying to understand which are the best time when to sell those loans. And sometimes you just collect the money back when it's late, sometimes not. So always there's a part of loans that you just selling off or just saying that, okay, this is not going to come back.
But there's like a difference, like sometimes you process it internally and follow up, and sometimes you just sell the issue or the problem of the...
In most of the products, the process is preset and it's pretty straightforward. So when we see that the borrower isn't paying back, we start to communicate with him. And then if it's not successful after 45th or 60th day, then we are just trying to sell those loans. And that's it. And some of the markets, the prices for selling those loans are good. Some markets it's lower, and then we just try to calculate what are these metrics that we see. For example, there's probability of default, and then there's loss given default. So basically what we see there is how much do we lose the money if it goes in default. So if it passes those 30 days, how much do we lose? And we are following those metrics in all the countries and trying to understand trying to find some partners that are buying those loans and just to improve these figures, because they affect our revenue. So
do you have like so you're selling it for a certain market price, the remaining principal, or how does it work?
Usually it's there are multiple companies in most of the markets, but the prices might vary in all of those markets. I mean, in Poland and Latvia, those prices are pretty high. I mean, it might be 50% of the principal if you're selling that, but it depends how late is the loan. So if it's 120 days late, so the price will be lower, because also those companies understand that unlikely that the person will pay back.
But you have basically partners in place in every country that is...
But every country is really different, because there are no universal debt collection processes. It really depends on what is happening in each of those markets. So it differs, but generally speaking, if we can sell for a good price of those delinquent portfolios, then we are just selling them. If not, then we are trying to do something ourselves.
Okay. Last part in terms of the risk, it's obviously insolvency. To me, that's obviously on a bigger scale now, not looking at this particular loan risk, but probably investors also assume, okay, Twino for whatever reasons, let's circle that out for the time being. Apparently, the company struggles to earn on a profit and to make an earning on its business model. At one point, probably investors will say, okay, maybe like the group will have some difficulties to remain in its current shape. You can restructure, obviously, but if an insolvency would happen, what are maybe precautionary measures that you have in place for, let's say, in particular for the investors that are operating on the lending side, which is basically an entity and a subsidiary from your business. How can you cover them, or is there anything that you have in place so you can keep track of the numbers of the finances to prevent something like this to happen?
Well, first thing, as we spoke, we obviously try to cover all of the risks as we can, but sometimes insolvency is something that happens for some company. And in our case, the whole business concept is that we are selling claim rights to investors to a specific loan. So what it initially means is that the investor owns a part of that loan. Legally, it's something that the person owns. And even if Twino or any other platform or company goes default, it still doesn't mean that the borrower can decide, I'm not going to pay back.
The claim remains.
Yeah, the claim is there and the borrower still has to repay the debt. And in most of the cases, if there is insolvency, there will be some insolvency agent that is, mostly those are companies that are working with a specific case. And what they're trying to do, they're trying to get the money back from the clients that have been to the company and giving it back to the creditors of the company. So for the platforms, the creditors would be the investors, and so these agents would try to give the money back to them, and that's basically what would happen. That these things like that are usually written in all of the countries, just laws, and it's just handled accordingly.
Do you have specific partners that you collaborate for this? Because I think I remember Mintos was very transparent here. They said like every month they transfer all the current loan data to a data saving platform. So on a monthly basis, there's an updated list which claims you have against which borrowers, and the overall accounts, which I think is quite a lot of data when you consider their growth. And then at the same time, as you said, an insolvency agency that would then take care of it. Do you have specific partners already that you work on, maybe for sharing that data, or?
We don't have any specific partners, but for example, in Russia, what you do, our business is regulated by the Central Bank of Russia, so we have to hand in lots of data from time to time to them. We are auditing all of the financial statements that we have, and auditors are looking at our data, and all of them are saved in our systems. On the platform side, we obviously see all of the loans that have come into platform. We see which investors have invested in which, and we can't just delete this information and run away somewhere. It's not possible. So the information is there, and it would be pretty straightforward process. And for the investors, it might be even a win situation in some of the cases, because the claim rights work in a way that you receive all of the receivables for the loan. So obviously in our case we are paying 10%, for example, for investors, but we are receiving a bigger part from the borrower. In this case, as there's no more the company that is issuing the loan, investors get whole part of receivables from that loan specifically. So it's not the one that you agreed or that you promised for the investor. It's actually what you agreed with the borrower. So that will then transfer to the investor. Essentially they might get even more money. In some of the cases, of course, not all of the borrowers will repay the money right away, but it should in some period of time.
Okay. Good. Then coming to the last part for the interview, let's talk about the future. What's ahead for Twino? Twino, to me, also in that article that I read about Twino in October 2018, is on the verge of becoming a bank. I want to quote again your CEO, Armin Brooks. He said, the cost of capital is the crucial thing. So we can offer better terms for our customers. We need a banking license. With a license, money is much cheaper. I think we will stay digital, but with deposits, consumer lending and business loans. next year we should convert to a bank. What are the chances that this will happen eventually this year?
I mean, this year pretty unlikely, but we are looking into something like that as well, because some of our operations are in Europe, and if you create a digital bank in Europe, you can obviously attract deposits from across Europe, and then you can lend the money cheaply to consumers in multiple countries in Europe. So that's one of the things that we are exploring. So trying to understand how that would work, how that would convert our business, whether that would make sense. So a lot of questions there, but we have worked a lot on that. So we already have some ideas, but yeah, definitely more information will follow if we decide to do that. So because obviously we would like to also have investors as our clients if we decide to go there. But yeah, we'll see.
Okay. What is the general vision that you can share, at least for 2019? What is, laying ahead for Twino? What are the next, big topics that you feel you can also apply this year, and what investors can expect of Twino in 2019?
Yeah, we'll definitely explore more and more possibilities in different loan types. We'll try maybe some different products in some of the countries. As I said, in Latvia, we'll try SME lending, but we'll see how it goes. Maybe we decide not to go there. That I would say, well, maybe we will not invest that much capital in there. We have to understand how does it work, whether people are willing to work with us in SME funding. We'll see. So that's something that we want to explore. We're also looking on different types of loans in Russia. We are looking at credit lines. We are looking at car loans and all kind of things, just to see how we might work there. And those are the key focuses for us. And also on the sides, we are looking on further markets in Asia to see maybe we can go there. But yeah, probably a lot of due diligence and to understand how it's working in those markets. I mean, so that's the focus for this year.
Okay. That's it so far. In terms of my question, we talked more than an hour already. Lastly, I would just leave it up to you. Maybe there's something you want to address directly to the German investors, a message from Twino, what you can, maybe it has been left out in this conversation, something you want to emphasize to the investors. Any final words from your side? Yeah,
I mean, I think for us the most important is that investors talk with us. So sometimes we are not receiving constructual feedback on what would they like to have. So you can easily just write to info@twino.eu. We answer all the questions pretty quickly, and as you probably saw our cabinet, so our room, it's pretty small. So I see customer support on my daily basis. So if there's some good ideas or some huge problems or small problems, then you can just write to us, and maybe they will they'll definitely give this feedback to me, and then we'll figure out maybe we can do that, because sometimes I'm mostly communicating with the bigger investors because I can't communicate with all of them, but there have been some smaller updates that we have done just for stakes of a couple of investors, because it's just easier for them. So yeah, that's something that we would definitely appreciate more feedback.
All right. If you have questions, let Roberts and the Twino team know. Oh, that's a tongue breaker. The Twino team.
Twino team.
Well, thank you very much for your time, Roberts. Very insightful. A lot of new things also that I have learned, not just about Twino, but also how different markets work, the different challenges all to P2P, peer-to-peer lenders are facing. So thank you very much.
Thank you. And thank you for watching.